Okay. Let's start.
All right, hello everyone. You guys probably already know my name, but my name is Salah, and as of yesterday, got elected as the new president of the club. So, just introducing myself. I do like photography and soccer as hobbies. I love to travel, and business is obviously my niche. So, if anyone like on the executive team wants to also like just go ahead, speak up, introduce yourself, and like give you guys some hobbies. What you guys do?
Interview them.
Yeah, I guess.
Whoever in the Zoom can hear.
I'm putting you on the spot because you're VP.
Hello, I'm VP. I wrestle for ESU. And my name's Avia Bibo. And I wrestle for ESU, and I'm really into business, and my major is finance. So I hope to like get into like an investment company or something, or like start up my own like business. I don't know. That's about it. Oh, here. Sorry.
Hey, I'm Eva. I am majoring in business management, and a hobby I like to do is work out. And that's it.
All right, hi guys. My name is Alori Williamson. I'm a finance major and I'm the communications officer, like communications and publicity. I don't know. Are we saying hobbies or what is that?
Yeah, if you'd like to.
Okay, I like to work out and paint. That's about it.
I don't believe everyone on the leadership team is here, but am I missing anyone? That's Sanaya. Right. Okay.
Hi, I'm Zeke. My major is accounting, and a hobby that I like to do is make music. Yeah. Stuff.
So there's a couple things that we need to go over today. If we don't get to everything, it's not that big of a deal. But the slide ever changes. Okay. So this is a review of some of the things that we are supposed to be going over. I was supposed to have a meeting with David, who handles like sanctioning the clubs. So unfortunately, he wasn't available today, so we're not gonna be able to go over rules and conduct. But for future presentations, our first portfolio, and then what this club is all about. So starting off with future presentations. So I'm not gonna read all the slides because I know you guys can read, but anyone in the club can make a presentation. If you guys are passionate about a topic that has to do with investments or even business startups, then you guys can come and present whatever that topic may be. You just got to schedule with us, communication officer, or just me personally. Just let me know and we'll get you guys on a schedule so that you guys can go ahead and do a presentation. And we want to try to make it as accessible online as possible. So if you just email me like your presentation and I'll post it on the Discord in the group me so whoever's not here can view your slides and everything. So for our first portfolios, obviously there's a lot more things than just these 6 investments that we can start off with, but these are the ones that me personally I feel like are easy to explain and are good starters. So we have high risk or low return. And usually within investment, there is sometimes in between, but typically not. So we can start off with doing one of each or all 6, but we're gonna have to agree on that as a club for the club portfolio. So options trading, I don't know if I'm not gonna go over the whole thing, but options trading is just high risk because of the high volatility and the ability to lose 100% of your investment on a trade, which you would never have if you're buying and holding stocks. So that's why holding stocks is the counterbalance for options trading. So we have crypto, which is even more volatile than what even options trading is. Options is really volatile. So if we're going to do crypto, we need to have bonds and security, or a security rather, where we're kind of countering our portfolio volatility with something where we know we're going to be getting return on. Like we know how much money we put in, we know how much we're going to get out with a bond. And that's actually what I wanted to start. And I'm going to go over bonds. That's the easiest to explain today. And we have limited time. So Also, foreign exchange, that's on the lower end of high risk because again, it's more predictable, especially with like binary trading. We don't have to get into that today. But it's basically 50-50 chances you're gonna win, essentially. So that's still high risk because if you lose your investment. So 50% that you lose all your investment. So that's pretty still high risk. 50% is a lot. And then real estate, which is again low risk, but also low return because it's more of a long-term investment. You're not going to be seeing like crazy returns instantly like you would with options trading, crypto, or even foreign exchange. So I also want to go over like who we are as a club. Now, we are a brand new club, so it's up to us to determine what we are. So this is subject to change based off of you guys' opinions. But I personally felt like the first thing we should start off with is business mindset and mental health because trading stocks can like degrade your mental health because you're spending so much time sitting behind the computer and like let's say like your trades aren't winning and you're feeling like you're losing all the time and or if you put in a lot of your personal money into the stocks and you're losing it, that could be a problem for your mental health. So we're gonna, before we even start investing, we should start with that. Business attire because your presentation is everything. Like even just me coming here in a suit yesterday got me elected as president, respectfully. So your first impression is really important. And as a club, we want to be able to like stand out from the other clubs. So if we're coming to our meetings in suits, people are gonna ask us like, where are you going? You know what I mean? Like you're in a suit, like, where are you going after class? And you can say, well, I'm going to my business or investment club meeting. I don't know if these people can hear me, but you can say that I'm going to my investment club meeting and they're more likely to want to join because we're looking professional, respectfully. So Daisy mentioned that we were potentially going to get funding for travel, but even if not, even if we could stay like small trips, like there's even like investor firms or companies, let's say, that invest around this area that we can go and visit and maybe they can give us tips and pointers on our portfolio or even come here, vice versa. So that financial literacy, where we want to be able to hold conversation on this topic, being investments. If you're gonna be an investment club and you can't hold a topic on at least one of our investments, like we're doing something wrong. So we want to make sure that you guys are financially literate. Investments, obviously, I don't even need to go over that. Also wanted to like teach everyone marketing. So you can market yourselves, or if you're a marketing major, you can bring your skill sets here and teach everyone else marketing so that we're able to promote the club and promote each other's businesses. Some people in this class have businesses. Presentation skills, like what I'm doing now, like that's why it's open for everyone to practice presentations here because we want you to be able to, again, financial literacy, the only way you can be literate is by practicing your presentations. If you want to get a business loan for your business, or even let's say like you want to be a big time investor, you're going to have to present to the bank why you need their money, why, or what you're going to be doing with it, so on and so forth. And obviously we're all about money because we're here, it's an investment club. So the end goal for us is for the club to make money so that next semester, the next executives can be making decisions and they're not like broke trying to make trades. So, and then also for everyone personally, like we want to help each other with as many investments as we can so that when we graduate from college, we have some type of financial standing. If you want to buy a house, buy a car right away, hopefully we can get there. So I didn't expect to get there this fast, but I'm gonna go over quickly like bonds, the different types of bonds, and why I want to start with bonds. Again, subject to change. We all have to agree on it for us to start with it, but there are a lot of types of bonds, and you guys kind of need to understand what bonds are and why we're starting with this. So why do people buy bonds? People buy bonds because you're able to accurately predict how much money you're gonna get out of your bond without outside factors. Like, for example, investing in Tesla. At any point, we could have a superconductor shortage like we had, and the value of the stock can degrade, and then you're losing money that you didn't foresee. Let's say we had a trip coming up and we plan on using our portfolio in order to go on the trip, and we're planning for Tesla to reach a certain point, but it doesn't hit that marker, or we're even losing money. Bonds, you don't really have that problem. There are ways that you can lose money in bonds. I'll go over that, but they're very rare circumstances. it's a way to preserve capital. People sometimes use bonds as like a sort of like a savings account because when you put money into a bond, typically it's secured. You're not able to access it until after it matures or you sell it to someone else. Kind of how like an option works, which we'll go over later. And it's also a way to offset stock portfolio volatility. So like I was saying, like if we're trading options or even crypto, we need to have bonds. Like at least 50% of our portfolio needs to be in bonds because we're messing around with high volatility stuff. You want to have a savings account or something where you know your money is safe for again next semester. So if we blow up our account, next semester comes in, if we are not able to get funding again, we know that our bonds have us covered. Okay, so what happens with your money when you put it into bonds? So just for ease of terms, we're gonna go with US Treasury bonds. If I hand them my money, it's technically put into an account for them to use for, let's say, funding for a college. They want to build a college. A way that the government raises money is taxes, but another one is bonds. You put your money to a bond. It's like giving your money to someone like, hey, bro, you're building a college. I can help you out. You're gonna come to me for funding. So I'm gonna go to the public and ask them for funding. So I'm the middleman, the government. And they're gonna collect the money through the bonds, spend the money on the project. And as the money gets returned from the project, then I put money back into the bonds to hand back to you with interest because you're doing me a solid. So that's pretty much how it works. And there's, private, public companies also offer it, but these are terms. And what I want to start with is government, specifically US Treasury bonds, because, I'm going to go over that. Yeah. So I'm not going to read this whole thing. There's a lot of information. If you guys want to take notes, that's fine. But I'm just going to give you a second to read this, and then we can decide or have a discussion as to what you guys think is the most safe. So just take a second to go over that. US Treasuries is specifically the type of bond that I wanted to start with, specifically because they're short term. So a lot of bonds are typically as you can see here, 5, 10, and 30 years. Come on, we're gonna be graduated by the time we meet the requirement for the high-end treasury bonds. So, or even municipal bonds that are also long-term as well. Just to reiterate that bonds can be very long. So treasuries tend to be short-term securities. A few days, you do a 3-day bond up to a 52-day bond for those. Treasury bills. Notes are longer term, 10 years, but they have, they kind of work like options where they have intrinsic value, and there's things that are happening where let's say the inflation rates, as the inflation rates go up, because we're the ones that are being credited, inflation rates are actually good for us with bonds, because as inflation rates raise, that's more money that the government owns us. Okay, so that's actually a good thing. So notes are good because they have higher rates of interest to begin with. And then as it goes up, we make more money. But treasury bills is what I wanted to start with because they're really easy to go over the terms and everything. As far as the restrictions are pretty low. We don't have to worry about liquidizing them, if that's the word, the liquidity of the bond, because again, they're short, so they mature quick. But something like a note where we have a lot of money in it and it's stuck in it for a long time, if interest rates are falling, it's hard to sell a note or even a municipal bond, because again, it's long term. No one really is looking for them, so it's hard to get a buyer for them. Once you get locked into a bond, just like a contract with options, you're locked in. You have to find another seller to come and take the bond from you after you create it. So that's why we want to start with treasury bills, just because it's easier. If we start making money and we want to look out for the future of the club, maybe we can start doing other types of bonds But pretty much we want to start with treasury bills, and next meeting we can go over them in more depth, but I have more slides that we can go over today. Did everyone see that, or we're good? Okay, so risks and benefits of bonds. So I'm gonna start with the risk side, just because that's what scares everyone the most. Credit. Now, in business, credit is like an interchangeable term. So credit is not necessarily just what you use your credit card for. That's just a simpler way of them explaining to you what you're doing. But credit, like, we're the ones that are the creditors in this case. So when you have a credit card, you're being credited. If we're the owner of the bond, we're the creditor. So we're crediting the government with the US Treasury bonds by giving them money, and they owe us interest, right? But there's always a possibility with credit that you don't pay your credit card. Same thing for them. There's always a possibility. Now with the US Treasury bonds, it's very low because like the government has money. Like, what are the chances that they don't pay us? But if you use like the companies and like the corporations, there's times where they take your money for a project, their project flops, and then they cannot meet the requirement of the bond. So then the bond ends up being void. It's risky sometimes. So then another risk is interest rates. The interest rates determine a lot when it comes to bonds. So that's going to be something that we're going to have to start looking at and going over a lot, because as interest rates rise, the government can be like, wow, like, this is too much. Like, I can't afford to pay everyone this crazy, insane interest rate. And just how you can refinance your home, in a sense, they can refinance their bonds. So what they can do is they can close your bond and give you the option to open it, or just give you the intrinsic value of the bond where it is at that time. Sometimes they don't even give you the choice. They just do it for you. So like, we'll just wake up, come to a investment club meeting, and we'll have extra money in our account, and we'll go back and find out that our bond has been closed. So that does happen. The liquidity risk, like as I was saying, like sometimes it's hard to find a buyer. So if we're doing long-term bonds, sometimes it's hard to find someone to buy that bond from us right away. Like, interest rates could be spiking, like the world could be ending, and no one's buying bonds. It's going to be hard for us to get out and get our money back out of that. You know what I'm saying? So, okay. And then a call risk. That's the term. Call is the term that of the government closing our hypothetical bond. That's what you will call it, is a call. And then the benefits is that I already went over this in the beginning, but preserving capital and a predictable return. So with options, you never know how much money you're going to make out of an option. You can make 50%, 25%. I made 250% off of a option before, but that's not guaranteed. You can't go into an option every time expecting yourself to make even 5% increase on your options. But with a bond, when you get locked in, sometimes they have locked secured interest rates, meaning it's not going to change, it's locked in. So we can predict, okay, we have a 3-day bond and a 5% interest rate. Then we can predict how much money if we put in, how much we're going to get out, period. Okay, that's a simple formula. That's why I want to start with this, because it helps us with things like options trading. You put money in, there's 6 variables that just determine how the ticker moves, let alone how much money you can get back out of it. So like, that's obviously a lot more difficult than a bond. Then the interest from municipal bonds are exempt from federal income tax, meaning more profit for us, and maybe exempt from state and local tax as well. So less taxes. That's just a win as a whole, always. And that concludes my presentation. But if there's any, thank you guys. But if there's any questions or any slides you want me to go back over, I'm more than happy to do it. That's why I did this. But just going back to this slide of the portfolios, like what do we want to start with? So as you can see, I'm interested in bonds and security, but we don't have to start with that. We can start with even, I know there's a lot of people in here that do stocks. So even if you feel like buying and holding stocks and options trading is simple enough for us right now, we can start with that. But we're just gonna have to like come to a conclusion as to what we want to do first. Does anyone have an opinion or like anything that they specialize in that they feel like they're confident that we can succeed in one of these other things other than bonds and securities?
Do you want to like cover how people pick stocks?
Yes, I do.
What,
I do, and I honestly, I did not expect to get through that slide as quickly as I did, or else I would have put more information on it. But yeah, like I can go over how to like assess stocks. I plan on doing that the next meeting, like how to pick a stock, like what a good stock looks like, how to read profit loss charts, how to read income statements, and all these things so that you know the viability long term or even short term for a stock. So we can go over that if we decide to do options trading and buying holding stocks. Crypto is a little bit more simple in the sense of picking one because any crypto can like blow up instantly. And there's even some cryptos that are like imaginary coins that don't really require research or even like rationality. They just go up because Elon Musk said it will. You know what I mean? So like that's easy thing to do, but it's just the volatility of it. Like that's why we need to counter that with bonds and security, because if we're not putting 100% of our portfolio in crypto, that's insane for anyone, even on a personal level. If you're 100% crypto right now, take at least half of it out and leave it as like a cash and put it in like a savings account with interest or something, because anytime the whole thing can crash. Like all the servers that are responsible for Ethereum can get blown up, like hypothetically, and then now you're out of your money. So you gotta be really careful with stuff like that. But then foreign exchange and like what do they call, like dual pairs and stuff like that? Those are also easy because then it's just a matter of researching world trends and stuff like that, and then picking a pair that works and then sticking to it. And then after a while, we'll get the hang of the pair and we can make money that way. And then real estate would be the counterbalance, because then we can put whatever profits we make from foreign exchange, because it goes fast, especially if you're doing binary trading. You can have like 5-second trades. So then we can take our profits and just dump it in real estate. And then also, again, like taxes and a whole bunch of other stuff that has to do with real estate. We can talk about that later. But yeah, even if we just pick, again, 2, like 1 on each side or all 6, but we just need to like come to a conclusion together as to what we're going to do. Yes.
Yeah, I can give a presentation on stocks. I was a full-time stock investor for 3 years.
Okay, so you're the person to talk to.
Yes, so I invest in that.
So you believe that we should start with buying and holding stocks and options trading, or you're just saying that you can?
I'm no expert in options.
Yeah.
I'm no expert. Never traded options. I buy stocks on the more intermediate or long term. And
Yeah.
I did that for 3 years full time before coming to years ago, 3 times. I mean for 3 years, day and night.
Yeah, me too. Like I'm no expert either on options.
Somewhat, I can explain stock more comfortably to look at more holistic and strategic perspective in the long run, because stock cannot be viewed only in accounting intrinsic values, if you know what I mean.
Yeah.
The microeconomics environment supersedes that. So that's why you see like stocks that have net profit margin that consistently from 15 to even 40%.
Yeah.
If the microeconomics are no good, it's
still
down. Amazon average 15. You look at ISRG, it's about 20 over %. Visa, Master about 35, 40 consistently, even on the past quarters. But the macroeconomics is supersedes the intrinsic value, intrinsic accounting values, because the logic of things in the crux of stock is the value of stocks will increase is based on supply and demand.
Also,
so the correlation is not so closely with intrinsic values like what we call like for example net profit margin and
agreed consumer price and
right?
Yeah.
So that is why growth stocks tend to be like technology stock. They tend to have a very high PE, but high PE means it's forward looking. You are looking ahead very far, and the further ahead, we cannot anticipate what is happening. So that's why you got like Google, Amazon, you have like PE of 50, 70, 30, right? So when there's inflation, the it has contrasting, the impact is inverse with growth stocks. Growth stocks means that technology stock. Inflation up, growth stock goes down. You can see the trend sectors. So you need to look at a lot of the variable and the correlation and history of it, like whether the inflation now is reflective of the inflation in the 1970s, where the price of oil was very high and inflation in America went up to like 7-8%, you know. If you look at history, you read about that. So the understanding of like what is considered a neutral rate for stock is very important. This is where you would anticipate the lowest level to buy stock. The neutral rate of stocks.
Alan,
Yeah.
so I think that's a little bit too advanced.
Yeah, and
I mean, for some of us, maybe we understand.
that is a part of the point, though. Thank you for the information.
This last one, then I stop.
Okay.
Very important. You want to invest stock. Don't look at the profit, consistent profit, because the problem now is inflation. You got to read about to understand even your finance accounting major. The neutral rate of stock, that is the rate, interest rate rise, whereby it will stifle inflation rise and deter recession. That would be the neutral rate. So I anticipate the neutral rate at this time here, because things can change to be like slightly more than 4%. It's going to go to next year to less than 6%. You can look at the records back in the 70s and have a more longer tilted pattern in terms of it.
So before we go like more in depth into that, I just wanted to agree on like if we're gonna do options trading in stocks as a club, then it would be very much so worth us going that far in depth about stocks and so on and so forth. But the question is what we're going to start with before we.
You got to start somewhere.
Yeah, exactly. So like I was asking you if you do personally feel like buying holding stocks is what we should do, then like we should agree on that now, and then next class or next meeting rather, we should
ask some really quick questions just to know like how well people know about some terms. A very simple thing. Anybody knows PE ratio? Does anybody know what PE ratio is? Raise your hand. You don't know what PE ratio is? Raise your hand. Just be honest, it's okay.
It's
I
okay.
just
We all learning. We are all
that like a
learning.
few weeks ago.
Are you asking if we do not?
Yeah.
Okay.
We are all
No,
learning. It's okay.
PE ratio. See, this is what the key talk about PE ratio.
I know what
and
PE
basic
ratio is.
values. I doubt people know.
It's like the price to earning ratio.
Yeah, so we need to like start from there. That's what I try to say.
Yeah.
So we need to start from the very basic.
Right.
And for the advanced one, Ellen can make a video.
Right.
We can watch
And
it.
again, once you get into that, then like let's like I understand like it's kind of like we just got here, everyone doesn't know each other, but like shake that off. We're talking about money right now, and money does not care about your skin color, your age, where you're from, who you are. You can lose it just as quickly as someone older than you or younger than you. So as a club right now, we're making a very serious financial decision for also potentially even next semester or the year after, because we might not get into real estate if we choose just two this year. So right now, like raise your hand if you feel like comfortable with just 2 investments right now, or do you want to do all 6? So raise your hand if you want to do 2 investments. My hand doesn't count. So we have, okay, that's everyone. So we're gonna do 2 investments. Now, again, we have to pick one or the other. We're not doing 2 high risks because that's not practicing good investments, okay? So are we gonna do options trading, crypto, or foreign exchange? Raise your hand if you wanna do options trading. So that's still majority. That's majority of everyone. So unanimous vote for options trading. And do we want to counterbalance that with buying and holding stocks since we're going to be researching stocks anyways? Yeah, like buying and holding stocks. So we're just going to build a portfolio, and that actually works because we can, yes.
Sorry, this is just where we're starting.
Right. Yeah. So this is what we're starting with, and we're still gonna learn all these topics regardless. But just as far as the sense of like, if and when we get our funding, what we're gonna do with it, like this is now that we know this, like our treasurer can make decisions now. Now that we know what our first portfolios are gonna be, we know what portfolios to open when we get our funding. So we're starting with options trading, buy holding stocks. That's convenient because that's all the same account. We don't have to like open up a real estate account and a stock account for options trading now. So like that works. No complaints here, and it's easier to teach options trading while we're learning stocks because they go hand in hand. So, and then you'll be able to give a whole presentation on that.
Yeah, I just want to quick one, because the market is so volatile, right?
Yeah,
I profoundly feel we need, especially stock, need to have a certain level of understanding.
Right.
Whereby we cannot compromise, you're talking about investment, you're not gonna burn your money.
Yeah,
Right?
yeah.
It's a serious matter, right?
Yes,
A lot
serious
of
matter.
this money, right?
I agree. I do agree.
It's not like a simulation game, if you
Yeah.
are really.
Well,
investing,
technically, we
right?
are going to start with Thinkorswim. So it is going to be a simulation game to start off with. Thinkorswim, which Daisy put us onto, is a paper trading account. I plan on even starting that like with the club first before we start. Like even if we get our money like tomorrow, like we're going to do paper trading first because we need to understand like how reactions are like, on the stock market. Like something very tiny. Like you can be looking at a chart, like we're all jumping up and down, it's going up. And a news report happens, and like 10 seconds later, it's down like way below where we started. So like we need to understand like how to react for that, like how to use options trading to trade. Like if you're buying and holding stocks, right? Now, let's say we have 100 Tesla stocks and Tesla's going down, we can use options trading to do a put on the same stock. So while it's falling, we're making money. And then as it's going back up, sell our option and put that back into more stocks. So now that it's at a lower price, we have more stocks than what we started with. So we didn't really lose any money. We just gained more assets. So that's why like I also agree that options trading and buying and holding stocks can go very well hand in hand. I am not, again, I was gonna say before he started talking about the stocks and everything, but I specialize in options trading, not an expert. I've blown up my account. I will say it right here in front of everyone because it happens, especially with options trading, because again, it's high risk. That's why I'm talking to you where I am now, where I'm saying like, we're not putting 100% in options because that's just how you lose. So, yeah, so I'll be able to teach us what I know about options trading. Any questions that you guys have at all, actually, will just help everyone because it's probably someone else has the same question. And if it's something that I haven't asked myself yet, then it means something that I can learn as well because I'm not an expert. So for the next presentation, we can start talking about buying holding stocks, like how to pick a stock, what you're looking for, and get everyone set up on Thinkorswim so that we can start doing like trades together on Discord. So like even like tonight per se, pick a stock that we're all going to research together, come back, talk to it, discuss it, and then start trading, paper trading, not real money, paper trading. And we're all in on the same stock. So we can all be looking at the same thing, getting the same information and going through the same pain together, respectfully. Yes. Wow, that's a good question because me personally, I don't even know how to use Thinkorswim. I'm learning it myself because I was a Robinhood trader.
You're kind of familiar? Yeah, that's good. I'm not that familiar. Even though I trade for few months, I only use very few functions and I wanted to learn. So, yeah, so if you don't mind, maybe next Monday, she can present a little bit. I would use my same Zoom link and I will try to record it on my phone so that we can record it and then post it on Discord.
Yeah.
Everybody can watch it if you miss it.
And I've actually already posted an intro video that I watched, on Thinkorswim, but that's not in depth enough, honestly, because even with that representation, like watching her go through step by step, I was still confused. So it's very understandable. Even like as long as I've been trading, Thinkorswim is very complex. It's giving you a lot of information at once. And I think that's what's confusing you. It's not necessarily you don't know the terms or anything, you can't figure it out. It's just that there's so much information on the screen. Like I was even with Avi. I was with Avi earlier and I had her just like delete all the extra stuff on my screen because I was getting like stimulation overload. Because there's like the news and like a news thread on under the news, and then there's like a whole bunch of other irrelevant stuff that's going on. All I wanted to do was just buy a Tesla stock.
No, but they actually designed their app really well because they have a lot of keys out to replace order really fast.
Yeah,
So that we can catch the momentum.
the hotkeys.
Yes.
I saw that. So you
Yeah,
can like
so
program
they
your
are
hotkeys. So like literally, like we're like, let's say like we're in the hot seat and we're losing money fast, and we're like, guys, we need to get out of Tesla right now. There's literally one button you can push and we're out. Well, I mean, obviously someone has to buy your option or your stock from you, but as far as the order being placed, it's like instantaneous versus like Robinhood, where it's like a series of steps that you have to go through. And like it's like loading and you're sitting there spamming your phone. You know what I mean? It's typically not that issue with Thinkorswim, so that I've heard.
So, yeah, and I'm guessing a lot of basic stuff is, that's something we need to be familiar with.
Yeah.
And tomorrow, the Fed is going to announce how much interest rate they're going to raise.
Yeah.
100
2
points.
p.m. So that's, I mean, if you guys are free before, like, watch the start from 12 to 2, and then after 2 to 4, see what's changed.
I'll try to screen record it too.
Oh, good. So I think, I don't know, but I'm guessing, the stock will go up after they announce the interest rate.
Yeah.
It's already been dropping. So now, there's people feel relieved, like, okay, so now we know it's going to be 75 points or whatever, but then the stock will go up. So if you want to do really something short term, today, all the stock drop, so you can buy something low today and then sell it really quick tomorrow.
And also like I know everyone's busy. We're all college students. Most of them are trying to work and everything, but just try to like keep up on the Discord, because the more and more we talk in it, the more and more we'll be used to like talking and communicating on these trades. Because once we do start doing the paper trades, again, like I do kind of want us to at least generally be doing like at least some of the same trades. That way, like again, like we can come back and converse about it. And the only way for us to be like, you don't have to give out all your phone numbers and stuff. The Discord and the group me is for that. You know what I mean? So just try to like stay updated on the Discord. I'll be posting stuff often. Daisy posts stuff often. Lori will be posting stuff. Like just try to keep up on the Discord. We have a voice channel specifically for like what?
I don't know what it is. What it is.
The voice channel?
Yeah.
Oh, okay. So that's perfect. So I can explain that. So a voice channel on Discord is just basically same thing as a chat room. The only difference is it's like instead of typing, it's with your voice. Anyone could drop in, drop out at any time. And there's different rooms for different topics. We'll be adding and subtracting some as days go by. But pretty much I said that to say that we have a room for morning trades. So even like this morning, like even though no one's in it, I was in it. Just in case anyone wanted to drop in, ask questions, or just give a comment. So every morning, if I'm up, I'm not gonna sit here and pretend like I'm that disciplined, but I'm gonna try every morning to like be in there. Like I even chatted this morning, like does anyone down for pre-market analysis? That way we can look at what pre-market is doing. Because pre-market means a lot. You can get a lot of information just off of pre-market. You can even see some stuff happening pre-market and be like, what is happening? And then go see news of something that's like drastic, like natural changes. So pre-market that's a pretty big deal. And then the thing market opens like 9:30. So then 9:30 we'll place our first trades, and then during school just hit each other up during a Discord, like listen, like our stocks are going up, or listen, like guys, we got to get out. Do you see what's happening? That's the point of the Discord, is that we're talking to each other, communicating, so and like helping each other out. Yes.
I think another trend sector you can look at is quite consistent from Robinhood. How the stocks have been perceived in Robinhood. Kind of trend sector, you kind of know what is the trend in terms of stocks from Robinhood.
Yeah. Also you gotta watch Robinhood too, because they're known for manipulating the prices on your screen.
That's right.
Like they're known for that.
Yeah.
And even like the whole GameStop situation, which I'm still really pissed off about. Like they just decided that we couldn't trade. I didn't like that. So if you're on Robinhood, get off of it. Even though like it is a good platform, they have pretty easy to read charts. If you want to use Robinhood for charts, go ahead, go for it. But there is a little bit of a delay compared to even like was it Ameritrade? But still, like charts on Robinhood, easy to read. Just like I can't reiterate that more. It's made for the average trader. Like it's made for beginners. So like even like their level 3 charts are like nothing compared to like Ameritrade's beginner charts. So that's just something to think about. Yes.
Another thing I like about Robinhood is you can easily, like, you can, if you want to, if there's any IPO,
Yeah.
it tells you the news and you can enter to draw for IPO.
Yeah.
So I got several IPOs last year or the year before, Roblox, Robinhood.
I remember
and then,
Roblox.
Duolingo. So I got all those and I was able to sell it. Few days after the IPO, and then I was able to make money. But from other platforms, it's difficult to find those kind of news and then get into the IPO. So that's another thing I like about it.
So even again, any like questions or anything like you guys want to say? Like I have this idea, or like, you know, you're thinking pretty hard.
I saw you post something about the Greek letters in
Yeah.
options, like the Delta.
Delta or RHO.
Yeah.
I don't know how to say that, but rho, yeah. Theta, which is your worst enemy, is theta. Like I hate theta. It's like, oh my gosh, let me get into it.
So do you think you can find something in stock market like alpha, beta? I'm not sure if most people know, but it's good, like if they know what is alpha, what is beta.
Yeah.
So every stock also has.
So I have that on the Discord, but I'll pull up a chart right now just to see like what are they called? Variables of options. So like I said, variables do not determine share price. And what variables are like is basically it determines the intrinsic value of your option. So it's kind of confusing. So like how he was talking about intrinsic value of a stock. So there's a price that the business gets. I own a company, right? I can have someone come assess my company and determine what the value of the company is. And then based off of how many shares that I have, it gets divided up, and then that's your quote stock price, right? But as I become more popular, like just like a Pokemon card, there's an agreed shareholder price that, like, let's say I bought this card for $2 and I'm selling it for 50. Someone else has the same card and they can see that I'm selling my card for 50. So they're like, okay, I'm selling my card for 50. And then another person is saying like, okay, well, they're selling their cards for 50, so I'm selling my cards for 50, but the card is only worth $2.50. It's just a matter of the agreed share price. So when it comes to options, the way you get, instead of giving like a analysis on a company to determine the value of a stock, it all starts with your variables. So the under-yielding stock, you don't need to do that. The time expiration, which is theta, your amount of time that you have left in your option is a part of your quote intrinsic value. So I can have a $15 call for tomorrow and a $15 call for next year, same day. And the one for next year is going to be worth more because there's more time on the contract, the same way how bonds will work as well. So, I mean, again, like I'm gonna give another, presentation on this also, we can understand. Interest rates, I'm not gonna go over, but volatility affects your price of your options a lot. So again, the same call for $15, but on a really stable day is just gonna be dropping in value. And you're gonna be looking at like, well, the stock isn't dropping. Why is my contract dropping? It's because in your contract, each one contract typically is 100 shares. So you took 100 shares off the stock market to be in your contract. So if I have 10 contracts, that's what 1,000 shares that are just off the market that no one else can access because they're in my contract. Therefore, volatility affects the value of that contract because you have in your possession a large amount of stocks. So as volatility rises, because there's less, the rate of circulation is high because you have so many, they want your stocks back on the market. They want them. There's a demand. So your value of your option goes up. Now, if the stock is trading sideways, the volatility doesn't go up. There's the RSI chart and everything. We can go over again later. But you can see like the volatility, if it's literally, as soon as it starts to go like this, your contract starts to like drop, like it's pretty bad. And the reason for that is volatility, demand. Volatility, demand are like interchangeable terms when it comes to stocks. High demand, high volatility, low volatility, low demand. Okay. So, okay, yeah, so that's just like really quick. This doesn't have each of the actual terms on here. They kind of make them really simple. But I'll try to see if I can find another one since we do have time. They're called the Greeks, by the way, the terms that we're talking about. The variables, they're called Greeks. 4 types of options. Okay, so here we go. Investopedia, I trust it. So delta is the first one that you're gonna see. I thought there were 6, but it's saying there's 5. As you can see, delta represents the rate of change between the options price and the $1 change in the underutilizing asset price. So the actual price of the stock that you see on your ticker starts with that's what the delta represents. So as the ticker goes up and down, your delta changes. So remember, I was telling you guys, like, like you want to trade options, it's like pretty difficult because it's 6, I said 6, but it's 5 variables that are changing at once, determining your price. Delta is the first one, and that's the least important one because again, agreed pricing. Like I can have an option that's only worth $500, but I need it gone now, drop my price to 250. So there you go. Delta doesn't mean anything at that point. I lost money regardless. So the intrinsic value also is determined by theta. Theta and time decay, again, are interchangeable. You're gonna hear people say theta time decay, or theta. Theta just represents the amount of time that's left on your option and how much time that's worth. So sometimes like I can be doing a 1-day options trade and the theta rate still be low because of other things like gamma and vega that are countering it. Or like volatility. Like if I'm trading Tesla same day, theta is like insanely high because of the price of the stock is high. And then the volatility is high, but it's not high enough to counter the price of the stock and then how quickly it's decaying, if that makes sense. Like if I do a penny stock, same day trade, theta is low because there's not a lot of things to be decayed because it's not worth that much. The delta is low. So there's not much to decay. But because it's a higher stock, and again, you're talking about 100 stocks in one option. So if it's a $300 stocks, you're talking about a lot of money that's in one option. So that obviously there's more room for decay. Yeah, if you guys are confused or need me to reiterate or like further explain, just like let me know. But yeah, so theta time, that one's easy because they both start with T's. And theta is like the worst one. Like that's the one that's gonna kick your butt the most, honestly. Gamma, which even I'm not fully familiar with because these are very difficult terms, but it's the rate of change between delta and the assets yielding price. So like the range between the two. Again, I'm not gonna sit here and pretend like I can fully explain that to you because I already said I don't fully understand that. And then vega is the change of the volatility. So vega volatility. As volatility goes up, vega goes up, volatility goes down, vega goes down. You want high vega. High vega means high demand. So there's more of a chance that you're gonna be able to get in and out of your trades based off your vega. So when we're picking a stock or option rather, for me, what I look at is Vega first, because Vega can counter theta. Vega first, if Vega's high, that means there's demand for that option. I want in. So then I'm gonna go through and look at what is determining like my theta. So am I gonna take the risk, do a same day trade? Or am I gonna just go like 2 days out, put a little bit more extra money in, but save on theta so that my Vega can carry me further and still close it on the same day? Just because your closing date is further out doesn't mean you have to close on that date. That's called your maturity date. You don't have to wait until your maturity date or expiration date. They're interchangeable as well. So you don't have to wait till then. But Vega just helps you understand how quickly you can get in and out of that trade. Yeah, are we low on time?
It's already 3, almost 3:10.
Okay.
So, I mean, we have the room till 4, but
Yeah, and I got through my presentation. So again, so anyone can come, just to reiterate, for everyone, anyone can come and do a presentation. Just let us know in the Discord and we'll get you on schedule so that you guys can start doing presentations as well. We already decided that we're gonna do options and stocks. So again, Discord, I'm gonna be talking to you guys about that, some of the options that, some of the stocks that we're gonna choose to start with for paper trading. So yeah, I'll hit you guys up on Discord. Everyone have a good day. Yeah.
Since we're not starting crypto, I figured should I wait until